Let me tell you what happened about 3 months ago. A client, let's call her Michelle, came to me after working with a financial advisor for 8 years. She had a $1.2 million portfolio. She thought everything was fine, but something was bothering her. Her advisor kept recommending specific mutual funds, and when she asked about lower cost alternatives, he'd always say things like, "These funds have better performance," or "We have a special relationship with this fund family." She felt like something was off, but she couldn't put her finger on it. So I asked her one simple question. "Have you read his Form ADV?" She said, "Is what?" Exactly. Most people don't even know that exists. So we pulled it up together, and there it was. Her advisor was receiving revenue-sharing payments from 3 mutual fund companies. He was getting paid by the fund families to recommend their product. Now here's the thing, this is legal. He disclosed it. It's right there in the document. But Michelle had never seen it because he never actually showed her the Form ADV. He just said, "You can find it on the SEC website if you want." How much was that costing her? Well, we ran the numbers, and over 8 years, the funds he recommended had underperformed comparable to other index funds by an average of 1.2% annually after fees. On a $1.2 million portfolio, that's about $14,400 per year. And over 8 years, that added up to more than $115,000 in lost returns. $115,000. That's really the price of my first house. All because of a conflict of interest she didn't even know existed. Now here's what makes it so frustrating. Michelle is smart. She's a senior VP at a Fortune 500 company. She reads contracts for a living. But when it came to her financial advisor, she trusted him. And that's the problem. Because the financial industry has created a system where conflicts of interests are legal as long as they're disclosed. But disclosed doesn't mean obvious. Most of these conflicts are buried in a 40-page disclosure document written in legal jargon that would make your eyes glaze over. So I'm going to show you exactly where these conflicts hide, and more importantly, how to find them. Hi, I'm Jill Collins, wealth strategist and creator of the Wealthy Woman Blueprint. And today, we need to talk about something uncomfortable. Your financial advisor might be hiding conflicts of interest that are legally allowed, and they could be costing you hundreds of thousands of dollars over your lifetime. Now, before you think I'm being dramatic, let me show you actual proof. I'm going to walk you through real conflicts buried in advisor disclosures, the kind most people never see because they don't know where to look. And at the end of this video, I'm going to give you my complete advisor evaluation checklist, a strategic framework that shows you exactly how to uncover these hidden conflicts before you invest another dollar. You can grab it for free at jillcollins.com/advisor check. That's jillcollins.com/advisor check. Because what I'm about to show you, it's going to make you want to ask your advisor some very direct questions. So let's get into it. All right, let's start with the most important question you need to ask your financial advisor. And I mean this literally. Ask this exact question, word for word. Ready? Are you a fiduciary 100% of the time? Now, here's why this matters. A fiduciary is legally required to act in your best interest, always. But here's what most people don't know. Not all financial advisors are fiduciaries. Some advisors operate under what's called a suitability standard. That means they only have to recommend products that are suitable for you, not necessarily the best option. And even some advisors who call themselves fiduciaries, they're only fiduciaries part of the time. They might be a fiduciary when managing your investments, but when they sell you insurance or annuities, they switch to a broker role. And now they're operating under the suitability standard. This is called dual registration. So when you ask, are you a fiduciary 100% of the time? Listen carefully to the answer. And by the way, if you're finding this helpful, I share strategies like this every single week. So if you haven't already, go ahead and subscribe so you don't miss the next one. And definitely share it with others. If they say, well, it depends on the service, or yes, for investment management, but fill in the blank, that's a red flag. You really want someone who says, yes, absolutely 100% of the time. And I'll put that in writing. And by the way, all of this is in the checklist I'm giving you at the end. So make sure you grab it. Okay, next question. And this one makes advisors uncomfortable. You ready? Are you compensated by anyone other than me? Because here's the strategic reality. If your advisor is getting paid by someone else, a fund company, an insurance carrier, a brokerage firm, their incentives are split. They might say they're working for you, but part of their paycheck is coming from somewhere else. And that creates a conflict. So where does this hidden compensation come from? Let me show you the most common sources. First, revenue sharing. This is when mutual fund companies pay advisors to recommend their funds. It's like a kickback, but it's legal. Second, 12B1 fees. These are ongoing marketing fees baked into mutual fund expense ratios. A portion goes to the advisor who sold you the fund. You might not see it on your statement, but your advisor is getting paid every single year you hold that fund. The third is insurance commissions. If your advisor sells you life insurance, an annuity, or a variable life insurance policy, they're likely getting commission from the insurance company. Sometimes 5 to 7% of your premium goes straight to them. Now, none of this is illegal, but it is a conflict because when your advisor is incentivized to recommend specific products, you have to ask, are they recommending this because it's best for me or because they get paid more? And you deserve to know the answer. All right, let's take a quick pause. If you're realizing you don't actually know how your advisor is compensated, or if you're starting to feel a little uneasy, that's exactly why I created this checklist. It's called Your Advisor's Hidden Conflicts, the Strategic Evaluation Checklist. It walks you through every question to ask, every document to review, and exactly where to look for hidden conflicts. And you can get it completely free at jillcollins.com/advisor check. That's jillcollins.com/advisor check. And I'll give you the link again at the end, but definitely grab it because you're going to want it when you have your next conversation with your advisor. Okay, let's keep going. Now, let's talk about Form ADV because this is where everything is disclosed. Form ADV is a legal document that every registered investment advisor must file with the SEC. It tells you how they're compensated, what conflicts of interest they have, and whether they've had any disciplinary actions. And your advisor is required by law to give you this document. But here's the thing. Most advisors just say, you can find it on the SEC website and leave it at that. They're not going to walk you through it. They're hoping you won't actually read it. So I'm going to show you exactly which sections to focus on. First, Item 5, Fees and Compensation. This tells you how your advisor gets paid. Is it a flat fee, a percentage of assets, commissions, all of the above? Look for phrases like performance-based fees, or we receive compensation from third parties. Those are red flags. Second, Item 10, Other Financial Industry Activities. This section tells you if your advisor is affiliated with other financial companies, like a broker-dealer or an insurance agency. If they are, that means they're wearing multiple hats, and those hats have different standards. Third, Item 12, Brokerage Practices. This is where they disclose if they receive any benefits for directing trades to specific brokerage firms, sometimes called soft dollar arrangements. Basically, they get research or software paid for by the brokerage in exchange for sending your trades there. Is that in your best interest? Maybe, maybe not, but you should know about it. And finally, Item 14, Client Referrals and Other Compensation. This is where revenue shares show up. This is where you find out if fund companies are paying your advisor to recommend their products. All of this is in Part 2 of the checklist, Form ADV Deep Dive. It tells you exactly what to look for. And trust me, when you start reading your advisor's Form ADV with this framework, you're going to see things you never noticed before. Okay, so now you know where to look. But what do you actually do with this information? Well, let's be strategic about it. First, don't panic. Just because your advisor has conflicts of interest doesn't automatically mean they're doing something wrong. Conflicts are everywhere in the financial industry. What matters is how they're managed and disclosed. Step 1, have a conversation. Bring your questions. Ask them directly. I saw in your Form ADV that you receive revenue sharing from these fund companies. Can you explain how that works? Are there lower cost alternatives to the funds I'm currently in? If you are a fiduciary, will you put that in writing? Watch how they respond. Do they get defensive? Do they deflect? Do they say, don't worry about that? Or do they clearly provide documentation and take your concerns seriously? Their response tells you everything. Second, use the transparency score in the checklist. Rate your advisor on fee clarity, conflict disclosure, communication, and fiduciary commitment. If they score below 12 out of 20, that's a problem. And third, get a second opinion. Interview at least 2 other advisors. Compare their fee structures, their conflicts, and their transparency. You might find that your current advisor is actually pretty good, or you might realize you've been settling for less than you deserve. Either way, you'll have the information you need to make a strategic decision. All right, so here's what I want you to do right now. Go grab the advisor evaluation checklist. It has everything we just covered, all the questions to ask, all the Form ADV sections to review, the transparency scoring system, and your strategic action plan. You can get it completely free at jillcollins.com/advisor check. That's jillcollins.com/advisor check. Just enter your email and I'll send it to you immediately. You'll also get my weekly financial clarity emails, one practical money strategy every week. Look, your advisor works for you. You have every right to ask these questions and demand clear answers. This checklist gives you the framework to do exactly that. So download it, use it, and then come back and tell me what you found. Seriously, I want to hear your stories. Leave a comment, and I read every one. Or send me a DM. Just reach out to me. I want to hear from you. Now, protecting yourself from advisor conflicts is critical. But you know what's just as important? Knowing exactly what questions to ask before you hire an advisor in the first place. So next week, I'm breaking down my 7-question advisor interview, the exact questions I use with my clients when they're evaluating advisors. These are strategic questions that separate the professionals from the salespeople. Questions about fee structures, performance benchmarks, client turnover rates, the stuff that actually matters. If you're interviewing advisors, or if you're thinking about making a switch, you don't want to miss this one. So make sure you're subscribed and hit that notification bell. I'll see you next Sunday. Thanks for being here.